Okay, brilliant. Thank you everyone for plugging on. We will start the call now. Today's call is very informative. So make sure that you have your note and pen and paper with you. Um, it's brilliant to have you all here. Make sure that you have your pen and paper with you. Make sure you're making the notes, as this information will be very helpful for all of you. I want to start with the community first. I want to share the screen of the community. Let me go back there, and I want to show you guys how crazy our last week was. It was very nice for all of us to utilize the trades which were given and catch about 1240 pips. So last week we collected 1240 pips, and the week before that, I think it was about 900. Let me see the other one. Okay, it's not showing me the previous ones, but I think the week before we had about 940 pips, and then the week before 830 pips, which is brilliant. This week we want to aim to catch more, but of course we've got to respect the markets. If the markets are not ready, then we wait for the right time, the right opportunity, and we go in and then we catch and get what is ours. So in today's call, I will be sharing a lot of very informative information which will help you guys long term in this journey. This journey, as said, is a long term journey. Do not take this as a overnight success, a get rich quick scheme. This is not one of them. This industry requires time, effort, education, dedication, knowledge. Now, of course, I've spent 6 years trading in this industry. So I'm giving you my 6 years of my life that I've spent in this industry to you, so that you don't have to spend all that time. So you can utilize all the information and all the value that I'm going to provide in the previous calls, which I already provided, and the value that will be provided on this call throughout your journey. So in today's call, we want to start with the basic information, which I believe a lot of you want to know about, such as what is a pip, because you guys must have seen in the just how I showed you guys how many pips we collected. So far for this last week, which was, let me check the dates. I think it was from the 30th of no September till the 6th of October. From the 7th of October till the 13th of October. The business days are 7th of October to 11th of October. We collected in 5 days 1240 pips, which we call in the financial market. Now, every time I say in the chat, okay, we are 5 pips up, 10 pips, not 5, 10, but 20, 30, 40, 50. How many pips I always say, that's that stands for a percentage in points that we are catching. Okay. It usually represents the change in the fourth decimal place of a currency pair's price. For example, if we are trading Euro USD as an example, if Euro USD moves from 1.10000, as you guys can see here, to 1.10010, that is a 1 pip increase. Now, the last decimal is not the pip, that's a pipette. The second last one is the pip. So every time the second last decimal moves, that's the amount of pips we are collecting. Okay, and pip is percentage in points. That's what a pip stands for. Now, in terms of gold, a move from 2500, let's say gold stands at 2500, and it moves from 2500 to 2501. That will be 1 pip. In gold, the last decimal of the four numbers that we see is the pip. So this is what in gold is the pip, whereas with currency pairs is the second last digit. Okay, the second last decimal. Now, if gold moves from 2500 to 2510, that will be 10 pips move. Okay, so that's how a pip is counted in gold. So every time you will see a movement in this, that's how you calculate the pips, and then based on the pips that we are collecting, your investments will give you the return that you're expecting. Now, what is a lot size? Because, of course, when we are catching the pips, we've got to understand what sort of investment will give us what sort of return. That's the whole point, because we are investing in the financial market with a mindset of having a return on investment, because there's no investment that we do without having in mind what the return we are looking for. So before we do get to that point, we need to understand what is a lot size. Okay. In forex trading, a lot size refers to the number of units of currency you're buying or selling in a trade. So every time we are buying or selling in a trade, we are investing units. Okay, that's what we call lot size. It determines the amount of risk and potential profit or loss here are in the main in trading with lot sizes. Okay, so these are the main lot sizes which you will usually see. First one, I'd start from the bottom, micro, which is the smallest one, which is 0.01. A lot of you probably have seen in the screenshots and in the channel when people have started, the new traders put 0.01, which means you're investing 10 cents per pip. Okay, that's what it is. Then when you get to 0.10, that means you're investing $1 per pip. And then when you get to standard, one lot, that's $10 per pip investment. So what that means is it's the dollar return, the return of dollar per pips. Okay. So let's say that a currency pair trade or gold trade has moved 1 pip above. Once it moves 1 pip above, you'll get $10 or $1 or 10 cents every single time. Then now it goes to, let's say, $10, 10 pips. That's $100 on a standard lot size, $10 on a mini lot size, and about $1 on micro lot size. That's how you calculate your return on lot sizes using the pips. So the pip count in this market, in financial market, guys, never ever will a professional trader look for how much money you can make. They will look for how many pips they can catch. The more the pips, the more the return. Now, of course, if you're following risk management and you're doing everything correctly, then you might need a bigger account to have the crazy returns that you're seeing. But that's okay. That's a long-term game, as said. But this is what lot size means, and this will be on a pip per a percentage per point, which is pip return. So on catching each pip, that's the sort of return we can expect. Now, a lot of people generally message us asking how long should we stay in the trade? So, an answer from me to you of how long you should stay in the trade is it's very important for you all to understand that we are in financial markets. Okay. Therefore, it's important to understand that we want to make sure that we never turn a winning trade into a losing trade. That's the key information. If you're winning a trade, you don't want to get ahead of yourself and start thinking, okay, this trade can never turn around or whatever. It can never just go in the other direction. That's just not the reasonable way of thinking in financial markets. You always want to make sure that if there's a winning trade, you secure something out of it. So what you can do. Now, it's important that you use your discretion. Okay. You have to take, this is your decision. This is something that we can provide you the value, the information, the guidance, but you have to take the decision to see what's best for you. Now, what you would want to do with a winning trade is you can always secure partials or close the trade fully. If you see the profits and you're happy with them, you can either completely close it or you can partially close it. Now, if someone doesn't know how to partially secure the profits, you can go onto the YouTube channel where this video is uploaded and I've shared there how to secure partial profits. You can learn from there, you can understand from there. Okay. Every time, once you've secured a partial profit, what you want to do is you want to move your stop loss ahead of your entry. Now, again, if someone wants to figure out what's the benefit of that, there's another video for that, but I'll give you guys the information in this one. So if you've sold it, now, if the trade is 20, 30 pips in profit, which I generally type in the channel, okay, guys, it's 20 pips, 30 pips in profit. What you want to do is you want to secure something just to be on the safe side. Then once you've secured something, you can move your stop loss below your entry if you've sold it. If you've bought it, you move your stop loss above your entry so that you're completely risk-free. You have secured something in the financial market, and now whatever comes up next will be a bonus on top. Okay. So this is how long you should stay in the market. You've got to use your own discretion. You've got to take your own decision. You've got to see what's best for you. This is all information for you guys. But of course, the decision comes down to you guys, and you guys got to take that decision yourself. Now, what are the advantages and disadvantages of stop loss to entry? Now, a lot of people usually message me, okay, I got stopped out. Do you think I should re-enter or what should I do? So all this information comes with two sides, okay? The advantage is moving stop loss to entry helps you make sure that you always protect your winning trade. And as if it does turn around and goes against us, after we have secured half the profits, we will only miss out on half the trade that's left in. So we've made or we've secured something out of it, and then it turns around, it stops us our entry. It's completely fine because we've made something, and then let's say not just to the entry, it's just completely gone against us and hit stop loss, then we are not at risk because we've secured ourselves and we've made sure that we're out of the danger zone and we've secured something and it's okay. We go again, we go for the next trade. That's the advantage. Now, the disadvantage for a lot of people is some of you are busy at work and then you can't do it, but when you do it, you have that fear of missing out in your mind that okay, I've secured half the profits, and if it touches my entry and then it turns around, which in certain scenarios or certain cases it can happen, if sometimes it touches the entry point, stops us out, and then just drops or just shoots. So it goes, it's gone up, it's come down, hit our entry, and then it's just turned around and gone all the way to TP. And some of us, we do get left behind. I've got left behind in a lot of trades, and that's completely fine. But this is a disadvantage which comes with stop loss to entry. It protects us, but at the same time, it does take some opportunities away from us, and it's completely fine. It causes sometimes a revenge trade mindset. Whenever we do that and then the trade is at the entry position, then everyone starts thinking, okay, shall I re-enter and stuff like that? I usually type in the channel, guys, it's ready to re-enter. But if I don't, you can use your discretion. You can see if the market is still going in our direction after touching the entry, you can re-enter following risk management. So this is the advantage and disadvantage of moving stop loss to entry. Now, winning or losing, it shouldn't be and winning or losing trade aftermath. Okay, what should what you should be after a winning or losing trade? What should you do? So the most important thing is you've got to understand winning or losing is part of this industry. Okay, not every time will be the case where we are just winning. There might be some trades where we do hit stop loss, which we saw in the 3 weeks since this different channel, because we have a few other channels, but this new channel has been created. And this channel in 3 weeks, we've had about, I think, four stop losses and about 40 TPs, with in total about 3,000 plus pips, which has been collected. So if you have a winning trade, just be humble, be normal. Okay, we go again for the next one. If the opportunity is right, and but of course, if you hit your target and you're happy with your profits, then you walk away. You don't need to take every single trade. Now, if it's a losing trade, it's not the end of the world. It doesn't mean that you have to revenge trade or start thinking like, okay, I don't know if it's going to work for me and stuff like that. Every time you've got to do is just stay normal, because even if it's a losing trade, it's okay. There will be another trade, which might be the winning trade, which might not just recover the loss, but gives us 10 times more the return. So that's how, and that's the way your aftermath should be in every single trade. Either it's winning or losing. That's the best way in this market. Okay. As I said, in this market, there will be a lot of opportunities which will be in our favor and some of them which are against us. So that's completely fine. This is the mindset that you want to work with. Okay. Now, that was all the key things that I wanted to mention on this call. I want to ask you guys if anyone's got any questions for me. I'm happy to answer them. And if anyone's got any confusions, just please type in the chat box and I will answer them from there. But I hope this call was helpful. If it was helpful, but just please type a one in the chat box if you found this call helpful. And as I said, if anyone's got any questions, just please feel free to ask me. Okay, very good. Thank you for typing one. Very good. Thank you so much. One thing I want to mention is, meanwhile you're thinking about your questions, guys, if you have any, the call, that the call, sorry, the video which I uploaded on YouTube. This is a very helpful video. Okay, you want to make sure that you're watching this sort of stuff, because this sort of stuff is what's going to prepare you guys for what's coming up ahead and how you can win in this industry. Okay, this industry requires a lot of education, consistency, and dedication. Okay, and these sorts of videos, that video right there, I have given the blueprint of what I did, what made me get to the level, what made my friend get to that level. That sort of information is what can transform and accelerate your journey. Okay, instead of spending 6 years, you might just have to spend 6 months, and you might be at the same level as me or someone who's a professional trader, or like my friend or someone else. So it's all about getting value, getting the information, and that's all that is about. I believe no one has any questions, which is very helpful because it helps me go and relax sooner. I'm just joking, guys. We go again in the morning. The markets will open shortly. It's 9:30 now. In about 2 hours' time, the markets will be live. So we will go again. Just keep an eye in the channel. Make sure that the notifications is on. Make sure that you're subscribed to the YouTube channel so that you're taking advantage of all the value and information that's coming out. Um, Another thing I want to mention is this is not a financial advice. Okay, I am not a financial advisor, so everything that you do, you've got to do your own research. Okay, and always follow risk management. Always follow the guidance that's given to you, and never ever over leverage. Never ever think that you are better or you're one step ahead of the market. Of course, I have a lot of knowledge and information, hence why we've collected these many pips, but we'd never want to get ahead of ourselves and do mistakes which we can't afford to do. So that was all about it, guys. Thank you so much, everyone, for plugging in. And I will be uploading this video on YouTube so that all of you can get value from it. And the ones who have missed it can watch this and get the value and advantage from it. Thank you so much, guys. I will see you all in the channel, and let's go again. Take care.